The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And I'd like to start the show today to talk a little bit about this Scottish election that we have going, that we don't have, they have, about whether they're going to secede from the UK. And I was talking with a couple of my friends from New York who were in the hedge fund business over the weekend. And one of them made a real interesting observation. In Scotland, 16-year-olds is the voting age. So you have 16, 17, and 18-year-old, basically children are voting. And I don't know about you, but if you ever ask a 16 or 17-year-old whether they want more freedom or less freedom, that's a flat-out no-brainer. They're going to vote for, more freedom. So I don't know if it has anything to do with anything like that, but that's usually how things work out. It brought to mind something that happened to me on the floor of the Merc back in 1982. My daughter wanted to have a curfew of 1 o'clock in the morning, and we were in California, and her and my ex-wife would fight all day long about this curfew. And I was talking about one of the fellow traders in the pit. I stood at the back of the pit, so I didn't have to get involved with the animals that were in there trading. I told him what my problem was, and he was a psychiatrist from Chicago. Maurice Shear was his name. And he said, he said, if you teach me how to buy these T-bills or sell these T-bills, he said, I'll teach you how to take care of your problem in a matter of minutes. And I said, well, it'll take me a couple hours, maybe. But he said, it's really simple. He said, just no curfew. He said, tell her that she has no curfew. Anytime after 1 o'clock, she has to call her mother or me at 1 o'clock to tell her where she is. And that just as long as you know where she is, you're not going to worry about it. But she doesn't have a curfew. She doesn't have to come in at 1 o'clock if she doesn't want to. She had her own car. And you'll never believe it, but that girl never came in later than 10 after 12 any time. And the reason for it is there was just not a lot to do after midnight on a Friday and Saturday in the area where we lived. And he was absolutely right. So I don't know if this thing with Scotland is going to be a game changer of any kind, but I think it's going to cause a lot of volatility in the markets without any problems, in my opinion. I think it's going to be really very, very active, no matter what, I guess, either one or the other. I'm not sure. We have a situation here today where we have a very weak NASDAQ and a very weak Russell 2000. They have broken very, very badly. The Dow has held up the best, of course, as has the S&P. But I would like to bring this to your attention. If we go below 16,900 now in the Dow Jones, we're trading a little above that. But if we go below 16,900 in the Dow Jones Industrials, not the futures, but in the industrials, that's going to trigger a very, very strong sell signal based on the work that I do. It's a very important number that if it breaks that, we should go down a lot more. We've already broken it in the NASDAQ. That number came in at 40.38 on the NASDAQ futures, so that was triggered. Whether this is going to be the start of the big move down, I don't know. But, folks, all I do know is that once this top is in, there's not many people that are in the Tiger TV trading room here that are going to ever see that again. It'll be at least a generation, I believe. It'll be similar to the one we made in 29. And it's really odd yet that we have not taken out the high of September 3rd, which was the high from 1929. Now, that would be a really big coincidence, but we'll see if this is going to be the case or not. I don't think there's any question that we're looking at higher interest rates. You can see that all across the board. I don't know what the Fed is going to do this week. They're going to be in some type of a quandary because the market is telling them that rates are going higher, and yet they're trying to keep rates lower, which they've been doing pretty well for the past 4 years. But sometimes there's going to be a time where this is not going to work. it reminded me of John D. Rockefeller, who happened to live here in Tucson the last 9 years of his life. He passed away down in Florida, but he lived here for 9 years from 1927, I believe, to 1937, something like that. And he left a huge amount of money to the University of Arizona for medical facilities, and they're still using that money to this day. It's well over $1 billion. But Rockefeller said, I can say with absolute certainty that more money has been lost on people searching for higher yields and higher returns than has ever been lost by bank failures in the history of the world. And that's pretty much what Bernard Baruch said. He said, don't be concerned on the return on your money. Be concerned on the return of your money. And that's the quandary that we have going on. We've had a pretty good move down in the junk bonds that we were looking at a couple of weeks ago. Bonds are regular 30-year treasuries, and the notes are all going into higher yields, which means rates are moving higher. The market's trying to tell the Fed that we need higher interest rates. Whether that'll affect stock very much or not, I'm not absolutely sure. But it will tell us that we are looking at higher interest rates when we go to buy a car or mortgages or anything like that. That's what it looks like. Now, if you'll take a moment to look at the first two charts that I posted in the Tiger Den today and for Tiger TV, they come from our friend Mr. Z out of Philadelphia. One is the market back in the late 90s. It shows how the top was made. And what John did was he showed the relationship to what we're looking at right now when we made our top on September 3rd. It had the same characteristics. He also brought out the fact that Martin Armstrong from Martin Armstrong Economics had a high day back in the late 90s. I believe it was the 95 high. And he also had one for on September 2nd or 3rd of this year. So whether this is going to be, the same thing or not, I don't know. But patterns do repeat themselves, and this one is certainly repeating, what we've been looking at. We've had a little bit of a rally in gold today. It's up about $7 or $8. Well, not even that much anymore. It's only up about $6. And silver is still, up a couple of cents. But we believe that those prices are still going to go lower. I'll cover those after we go to the break. But I did want to mention a couple things that I think are very, very important. And that is the fact of where we are in some of these markets with the patterns that we're actually looking at. I wanted to show you one that has had a great deal of pressure under it right now that gets a lot of press, and that's the emerging markets, the EEM. And as you can see, after we made that 3 drive to a top pattern up at the 1.27 expansion, we've had a huge break, which is continuing today, and we're going to be challenging the C point below 43 here very shortly. And that is going to turn this market down, and probably down dramatically would be my first guess. But I think that the most important chart that I looked at this week was the New York Stock Exchange Index, and that was, if I can only find it, there we go. Just takes the Italian a little bit of time to dig these out, and then I'm okay. Not as fast as I once was, but I'm as fast once as I ever was. Okay, this shows the double top that we had in the NYSE. We're down also today. The key here, folks, is that this high that we made a higher high on September 3rd by 3 points on 11,000 point index, which is basically a double top. Now, this is far different than what happened in the top of October of 07 when we made a 1.27 expansion on the Dow, the New York Stock Exchange Index, and the S&P. So this market is actually far weaker than it appears to be when you look at these stock indices from where we were in 2007. And I firmly believe the move that we're going to have on the downside here is going to be worse than the move of 2008 and 2009. I feel very strongly about that. I could be wrong. But we'll see. What will happen. Now, I have a chart here from the the Russell 2000, but I haven't updated it as of yet because we're trading below around that 113 level. So we've had a big break today, and as you can see, we made lower tops. We did make a higher high in July, but we made a lower top on September the 3rd. So this market is also showing signs of, strong distribution and a potential move to the downside. But that double top pattern in the New York Stock Exchange Index, that should get your attention. If you ever had a chance to read Andrew Lowe's book, I can't remember the name of it. It's about the probabilities of trading. I know the name of this book by on the back of my hand, and I'm having a senior moment. But anyway, Andrew Lowe at MIT wrote a book on pattern recognition, and one of the most important patterns, of course, in there was the pattern of the double top and the triple top patterns. Those were some of the more accurate and more predictable of the patterns that he did. So this is very important at these double tops. We made a double top in the Dow. We made a double top in the New York Stock Exchange Index. We made a double top in the IBB, which is the biotech index. We made a double top in a little bit lower top, of course, in the Russell. So there's some really the name of the book was The Evolution of Technical Analysis. And I believe that you know what, I will say that it is not the right name of that book. The Evolution of Technical Analysis was his later book. That came out just a few years ago, and Dr. Lowe spent the first 60 pages of that book talking about astrology and how it has fit in with technical analysis. I'll think of that name. Oh, I know, I remembered it. The Non-Random Walk Down Wall Street. That was the name of the book. The Non-Random Walk Down Wall Street. But his book, The Evolution of Technical Analysis, he said that technical analysis started in 5000 BC with the Sumerians because they had on these tablets the moon, and they had the planet Mercury and the sun, and they had wheat prices also that they were referring to when they were talking about planetary things. Exactly what it was, I don't know. I don't know the Sumerian language quite as well as I do the other 11 languages that I speak rather fluently. Or is it 12? I can't remember. 11 or 12. Okay. I know one word in each of those languages, by the way, folks, so we'll have to wait and see. By the way, Tom O'Brien's got a really special show today, so try to listen in for that today. He's going to be really good, and I think you'll enjoy it very much as you do all of Tom's stuff. The U.S. dollar is still strong. We've got this, the Scottish referendum coming up, and I frankly believe it's going to be very, very big thing in the market. Whether it's going to be an event horizon type of event, I'm not sure. But an event horizon is from Stephen Hawking's about black holes. Okay, we take a little break here. We got the Dow up, the S&P down a bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into Tiger TV, I've posted the Dow Jones Utilities showing the head and shoulders pattern that we have there. That was another favorite of Dr. Lowe's. I have also put in the Bradley model. It shows the Bradley date came in right around September the 6th, that we've started to come down a little bit from there. But the Dow is not coming down at all. I mean, it can't even take out yesterday's low, whereas with the NASDAQ, we've shattered last week's low by a great deal of great deal, and we also did the same thing in the S&P, but the Dow has been the strongest. My opinion is that once we break below 16,900, which is 92 points from where it is right now, I think we're going to start a cascading move to the downside. And I've never really talked about a crash anymore for a very long time. In fact, I had to hardly ever mention that because they're so darn rare, but it really smells like we're getting ready to have one, folks, because of the complacency that we have in the market is just tremendously high. I mean, people just really don't really care, what really is happening. They're in a buy and hold mode. And we'll see whether he makes it, So we're going to take a look now at the British pound, because these currency markets, they're where real money is. They're thousands of times bigger than the stock markets. And we'll take a look at the British pound on the weekly basis. And as you can see, when the pound was making the high up there at 172.50, it was making a big ABCD pattern, and it was also completing a butterfly pattern. And if you'll notice, you'll see the 3 drive to a top pattern that was also completing. It took several weeks to finally to be finally done. Now, what this tells us, if we're looking at similarities, the last time we've had major moves down over the past 5 years, they will bring us down to about 158, about 420 pips from where we are in the British pound right now. We're trading at 162.30, and we could get all the way down to the 158 level. This could very easily happen if something is negative coming out of Scotland, and I'm not sure how the vote's going to go. Believe me, I really don't have an interest other than watching what's happening. I don't follow politics at all, and so we'll see how this finally comes out. But the pound does have some support down there at that 158 level. And it could be that this referendum will mean nothing. They could say no, and nothing really happens. We had, I think it was, I forget, it was Quebec, seceded from the province up there a few years ago. Nothing really happened there. So we have to wait and see how the market really remains that way. I don't believe that Scotland will have their own currency. I believe they'll still be using the euro. But that's my guess. But I am just guessing, and since you shouldn't be doing this trading, if you're guessing, you shouldn't really do that. So we're going to take a look at the next one, of course, which is the big one. That's the euro. And these really affect us a lot, folks. You might not think that they do, but they are very, very very, very important. And I'm going to do the long-term weekly here in the euro too, because you can see it has some huge moves, and it is very, very close to the 61% retracement down here at the 128 level. We're not very far away from there. We're only 135 pips from that, and it certainly looks that that's the way that we're looking for the euro to get down to at least the 128 level. This market has been in a bearish market since the summer of 2008, right before the crisis that we had with the savings and loan, which was not really a crisis. It was a big chance for a buying opportunity. But right now what we're doing is we're looking at this 128 level as key support. The problem with this 128 level is we've had virtually no rally since late March. It's just been straight down. We've had a couple of little burps, but that's really all we've had. It's just been a very, very bearish market, and it just continues down. And 128 is supposedly a good support because of the 618 level. But folks, if it fails there, it could easily go to 125. That's where the 786 comes in. So you've got to use a little bit of common sense, and put some stops in to see if you're able to to do this. I had an interesting call over the weekend from one of my little proteges, or students, you might want to call them, from Europe. This young man is in his 40s. He's been trading for 2.5 years now, full time. He was a software programmer. He made enough money trading to trade full time. In the last 18 months, he's never had a losing month, and I will tell you the rest of the bedtime story after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, the next market that we're going to take a look at is the gold market, because we're getting very, very close to completing the ABCD pattern on the weekly basis. That comes in at around $1,210 per ounce in the gold. That's about $25 from where we are right now. We're still about $1 higher in silver. It's trading around 18.50 something, and it could easily go to the 1760 to 1770 level, which would also be a very important number. That would be the 786 number in the gold market. So it would be very, very important to watch that if we get to that level in silver at 1760. But I'm not sure whether we will or not. The key number for me is $1,210 on the gold. We've had a little bit of a rally today. Hasn't done very much. We've only rallied about $10 or $11 off the bottom, so it's really not even a dead cat bounce. But what's interesting about this long-term weekly gold chart is if you'll notice the ABCD pattern, that we made back in 2012. It was a perfect ABCD pattern at the 786 level when gold was trading at 1800. That triggered a big sell signal, and we gave back about 40% of the gains that we had made just in that big move down from that pattern. Remember this ABCD pattern, folks. So sometime in the next 4 or 5 weeks or months, probably weeks, you're going to see this pattern in the stock market. And we're going to be ready for it. I can promise you that, because I've seen it so many times that I really want to be ready for this particular move when it comes. This was the same type of pattern we had on the daily charts when the Dow Jones was trading on October the 2nd of 1987. And from October 2nd to October the 19th, it lost 40% of its value. And so what I'm watching now is I'm watching for way out of the money puts, more than 10% out of the money, that are basically worthless, that expire sometime in November. And I'm going to probably recommend one of these here over the next few days if we get the opportunity. But these don't happen very often. They're once-in-a-lifetime things, these big moves down. But the way the market is so complacent, there's just no fear. I listen to the people on Bloomberg and on CNN, and they have such a buy and hold mentality now, which has never worked very well. It has over the past 5 years, of course, but long term, it's better to be, in and out of the market. I think using that trading system of buying on the new moon and selling on the full moon, did far, far better than any buy and hold strategy that the S&P ever had. So whether this is going to continue or not, have to wait and see. Now, I wanted to just to give you an idea of what this pattern looks like on a shorter term basis. If I can just get this moved up a little bit, there we go. We should be okay here. We're going to take a look at this now on a daily basis, so you'll be able to see the really clear target that comes down at the 786 level at around the 1212 level, 1210 per ounce. That's going to be a very, very important level, because if it doesn't hold, you're looking at below $1,000 in gold without any trouble. That's my opinion, and it's very oversold right now, but it's still not. It's still really not moving. We've got our first caller, our friend from Florida. Scott, are you there?
I'm here, Larry. I sent you a chart that I was interested in talking about, but could I ask you a specific question since you're on gold?
Sure, absolutely.
Larry, I know you're a technical trader. I know this, but you just described the British pound, which has been going down, from what I understand, because of that Scotland thing. So money is probably going into other currencies, and that includes the U.S. currency, because people are selling the British pound, and the euro just got another interest rate reduction, which means you get less money for your money that's in the bank. You pay them more money to store your money in their bank. And so money is going out of the euro into the dollar. And then there's some pegged relationships with the euro to the Swiss franc that I understand is, creating this flow of money that's kind of a distortion. And yet, when you look at the gold chart that you have here, you do it in terms of the U.S. currency, the price of gold in U.S. dollars. And the change in the dollar going higher may be a distortion. And that you're pricing gold to the U.S. dollar, but almost all currencies are printing money and are going lower. Their purchase power for gold should be more cost. It's lower. It should cost more money to buy gold if you're in the British pound. And I don't know if it is. This is my comment and my question. When you look at a gold chart in U.S. currency, it's representing a distortion in the dollar, which it doesn't feel right. You know what I mean? And so is there any value in assessing what gold's doing relative to all currencies when most of them are getting hit for some very bad fundamental or technical reasons, and money's flowing into the dollar because it's the last lousy currency to get into? It's not as lousy as the other ones. And
your cleanest dirty shirt.
Yeah, so, and we're trying to judge, the dramatic changes in gold because it goes above or below a certain level when the fundamentals and the other currencies that are also trading technically might tell you that gold is better than it would look to the U.S. currency in gold. Do you have anything you can say on that? Or?
Yes, I can. The fellow that does the best work on this, in my opinion, is Dennis Gartman of the Gartman Letter. I've known Dennis when he was in Chicago on the floor, but he's a very, very astute at these cross currencies with the gold and silver and crude oil and other things. Frankly, Scott, I'm embarrassed to say this, but I only trade what I see looking at gold versus the U.S. dollar. It's easy for me. I don't have to make any, decisions on what I think each currency is going to do. So I just look at the gold chart. It served me well over the years. I don't see myself changing, but what you just described is the way that a professional that's looking at all these different currencies and trying to place, millions or billions of dollars worth of assets should really look at that, because if you're long the euro, your euro is not buying as much gold as it used to, so it's really a big big difference. So we'll have to keep that in mind.
Just a technical thing, Larry. If I wanted that relationship, let's say the euro to gold, do I and I think I'd have to do it by setting up my pairs. I set the pair up.
Yeah,
how do you do this?
There's several websites that you can go to that'll do this for you, and most of the trading platforms that you have, like TradeStation or Thinkorswim or eSignal, Ensign, what they can do is they can put a spread on. In other words, you can go long euro, short gold, or short gold, long euro. That way, or you can just buy euros. If you go to the website and Google it somewhere, I know because I've done this before. Just go and Google gold versus the euro or whatever, something like that, and it will lead you to another spot where you can look at the different correlations of the currencies with the gold and the silver. But how you go about buying it in that way, I don't know, because I've been in the gold silver market ever since they started trading gold in '72, and everything I've ever done has been with the U.S. dollar. Even when the Swiss franc was going crazy back in the '70s, I never did any cross with the Swiss franc. Everything I did was with the U.S. dollar. So I don't know the answer to your question long term, but it must mean something, because these currencies are where the money is. I mean, you got to follow the money, like Woodward and Bernstein said, from Watergate, and that's where it really is. So I think the best deal right now, I think, is to be in the yen versus the gold, because the yen has been strong, and that would make your buy more gold, I guess. I don't know.
Well, the yen's going higher in the cash market. Is that correct?
That's correct. That means you'd be buying less gold.
Yeah, but the yen is going higher because it's related. It's the USD over the yen. Is that correct? So
that's correct. Yes.
So the yen's getting weaker.
No. The way I look at it, the yen is getting stronger. Based on, there's another thing that I only do what I see on my charts. I mean, I don't care if I'm embarrassed or not, because this is what I do. I mean, I'm not going to try to sit here and BS you, Scott.
No, listen,
because I have to tell you what I do.
I'm challenging you with questions, but I'm
glad you are, because I don't know the answer.
But Larry, you mentored me. You're the best thing I ever mentored, but I'm still going to ask you my question. So
that's okay. You should. But all I do is I trade what I see. That's what my motto is, and that's what I do. And I've had this argument with people before, but see, what I have concern about is the yen used to trade at 360 to the dollar. That was way back in '89. Now it's trading at 107. So that's about 1/3 the cost of the yen. So the yen has actually come down against the dollar, the way I look at it on the charts that I have. So we'll see.
Okay. I don't want to usurp all the time here, but I would be interested in the 5-point reversal pattern on the daily CAD, the Canadian dollar chart.
Okay, let me pull that up, and I'll take a look at it and see where we are with that, and we will have a pretty good idea of what we're looking at here.
And my question would be, and then I'll hang up, is I think it's getting close to setting up for a sell from sell to short. And how you would deal with it looking at a daily chart and looking at those bars, and how you would pace yourself, not be too impulsive.
Oh, I see what you're looking at, and I think we're going to get a little bit higher here. This is a really nice 5-way, by the way. There's a good spot. I think we could get to 111, and about another 100 pips from where we are now. that would be a really good spot to take a look at it, because we would have the 5-wave completing at that point. We're at 110.5 right now, and I think we could go to 111.5. But remember, with this referendum coming on the 18th, anything could happen. I mean, these things could literally, just literally knock the socks off or knock the ball out of the park at any time. So what I'm going to be doing, I'm not going to be trading. I'm going to be watching. After it settles down, I'll do my trading. But to get in the first part of that, I certainly don't want to have anything to do with it, because I'm concerned more about the risk than anything else. That's really what I'm more worried about.
I appreciate it. Thank you, Larry.
Hey, thanks for calling in, Scott. It's a really good subject matter. And when you're finished with your research, let me know, okay?
You know me. We will be talking.
I know you will. That's why I said it. Thanks for calling in. I appreciate it. Yes.
Thanks. Bye.
You bet. So we have a lot of these currencies. The Canadian dollar, the Japanese yen is another one that looks very interesting on the charts, because we were just discussing that. And we'll show the yen here. It looks like it wants to get to the actually, what I should do here is to show the yen in relationship to the Nikkei, because that is really the best way to look at this, because there's a big divergence happening right now, that the currency is much stronger than the actual Nikkei, because the Nikkei is trading at the 786 at this 15,900 level, and the Japanese currency has just absolutely, exploded above the highs of last December. And this has a very, very high correlation. And for some reason, it is not, it's still correlating, but not on a percent basis. The currency is going faster than the Nikkei. Now, I interpret that as bearish, but, I could be wrong on that. We're seeing a lot of things. I showed the emerging market, the ETF for that, and I have also showed the emerging market, the ETF for the Chinese market, the FXI, also looks very, very suspect in this area too. So all these things are really interesting coming together, and all at the same time. That here we have the 18th, which is the big thing on the referendum. Frankly, after listening to this guy from New York talk to me, I really think it's going to be a yes vote, because if these young people come out to vote, it's going to be really difficult for these folks to surpass that, because, they're interested in freedom. They don't care what the price. We already know what that's like, what price freedom, but we have to keep in mind that young people don't always do what we think they're supposed to do. Well, that might not be a bad thing, but who knows? We'll wait and see. So we've covered the yen, we've covered the Canadian dollar. Oh, we have to cover the Australian dollar, because that one hit a spot-on, perfect 61% retracement today. Just give me a second here, and I will get it up here. And if you'll give me a second. Oh, dear. Hold on. I'll have to change the scale for just a second, because I'm on my there we go. We'll just put it in right here, and you'll be able to see here. This is the Australian dollar on a weekly, and today's low was an exact to the tick 61% retracement. So that effectively puts in a potential higher bottom here from what we've had just a few months ago, back in early January.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Caller from California. Brent, are you there?
I am, Larry. How are you doing today?
I am good, thank you. What can I do for you, my friend?
I was calling about Tesla. It has this pretty long-ranging down bar today. I just was hoping to get your analysis if I could, please.
Absolutely. Let me pull this up and we'll take a look at it. I know it broke above the double top level at 262 before. So what we'd be watching here, I haven't checked on it recently, so just give me a second. Oh wow, this is very negative now. We've already come down here. Well, we did make that 3 drive pattern in Tesla. I had that still on my radar. Give me a second here. There we go. Yeah, you can see here I still have the double top where it failed, but now after we did that, we went up and we made a 3 drive pattern at a 1.27 expansion up there at the 290 level. Wow, something's happened to Tesla. I can tell you this stock's going lower. Whenever you have a gap down like this with this wide bar, of more than $23. If you go back and look, we haven't had anything that bad in this chart in the last 2 years. So something has happened to Tesla. I don't know what it is, but somebody knows something, because this is a big move down in a market that's been on the upside. We've actually left an island reversal there, Brent. Have you looked at that? This is a very, very unusual pattern. Let me move this out of the way here and put this in. This is an island. No, not quite. I'm wrong. It doesn't quite fulfill, because it misses it by just a hair. By $1. But that would have been an island reversal in the Tesla, and boy, that would have put the kiss of death on that stock. That's for sure. But frankly, it does not an island, because we were a little bit higher today than we were lower back on September the 5th. So it's going down. I think it'll go to at least the 230 level. That's the 61% retracement of the move from the low in July. That's what it looks like to me.
All right. I
hope you're not involved with the stock on the long side, because when it gaps down like that, you've got to be really careful. And when you see the market just explode to the downside like that, and it's a very popular stock, everybody loves to trade it, and just be careful with it, my friend.
No, I actually have December 265 puts on it, so.
Well, you're in good shape with December puts. You're in the money by $9, and you got a lot of time left. And if it's really good, if we go back to the May low, you could easily make 222 in the Tesla, because that's a 61% retracement, coming off the low that we made in May. And that would be equal to the move we had down in February to April. We had a move of about $100 a share. This would be equivalent to almost $100 a share in the Tesla if it gets down to that 222 level. So that's another target to be looking at.
Okay, well, I really appreciate it, Larry. You have yourself a great day, okay?
My pleasure, my friend, and thank you for calling in.
I'll talk to you soon.
Okay, just remember, folks, that we are looking at a potential double top here in the New York Stock Exchange Index, so be real careful. It doesn't look good with the NASDAQ weakening as much as it has. It's been the leader all the way up. The VIX Index is also showing signs that there's a potential for the market to, come down and go up a little bit more, so we'll have to wait and see if that is the case. So we'll have to, just to see what's going on with it, just keep in mind that these markets go up and down very, very quickly, but if we go below 16,900 in the Dow Jones, we've already broken this level in the NASDAQ, and that would be a level of 19,085 in the futures, then I think we're going to really accelerate to the downside. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.